Good morning, Marshall Reddick investors, and thank you for joining us today to learn how to use your IRA and 401k to invest in real estate. This is Christin Tabar. I will be your hostess with the mostest today for our presentation. And we will also be joined by our special guest, Mr. Dmitry Fomichenko with Sense Financial, and he's going to be covering everything that you guys need to know on how to use your retirement accounts to invest in property. So let's get right to it. Dimitri, I'm going to need you to, thank you very much. Oops, there we go. All right, so as I mentioned, my name is Christin Tabar. I am a real estate advisor with Marshall Reddick Real Estate. I have been working with the company for 5 years this year. I'm happy to share that I do practice what I preach. My husband and I own several properties across the country in many of our markets where we have teams and offices. And to date, I've helped with 347 transactions. So keeping that tally going, hopefully that will include some of you listening today as we learn how to set up our retirement accounts to help us invest in property and set us up for financial freedom. So who is Marshall Reddick Real Estate? For those of you who are joining us for the first time today, we are a full service brokerage here in Orange County and across our offices in Austin and San Antonio, Texas, Clarksville, Tennessee, and most recently Cape Coral, Florida. And we also do still work with some third-party partners in some of our other markets that I did not just mention. We work with owner-occupied buyers and sellers and those of us who are investors who are looking at purchasing rental property. We also are a full service property management company, not only here in California, but also across those markets that I just mentioned. And we also offer private lending to our investors who want to invest in mortgages and trust deeds, but also to those of our borrowers who may be purchasing with that self-directed IRA with that 401k, and they're looking at financing those properties. Your private or non-recourse loan will be the option if that is your path that you're choosing. So a little bit of information about Marshall Reddick. If you'd like to learn more, please don't hesitate to reach out or visit our website at www.marshallreddick.com. All right, so a little bit about my history at Marshall Reddick. As I mentioned, I've been with the company for 5 years. My husband and I have not only purchased through our teams at Marshall Reddick, but we've also started building properties in the Cape Coral area. And you guys can kind of read those stats on your own. But I'm really excited, as I mentioned, to work with investors and share my experience and share my own personal story, as I hope that that helps with some other folks who are maybe undecided, on the fence, or just overall looking for some more information. So a little bit about my history with the company. I hope to make some of these numbers even more exciting over the next couple of years, and look forward to speaking and working with some of you on the call today. So we're going to get right on to the next slide, and it kind of gives you a little roadmap of my personal journey with Marshall Reddick Real Estate, the properties that my husband and I have purchased over the years. We've also sold a couple properties. I mentioned a couple slides ago that Marshall Reddick does offer private financing, and that allows clients to invest in mortgages and trust deeds. My husband and I have done that as well. So I think it's very important to have a diverse portfolio, to own properties in several different markets, and also get in on those hard money loans if you can, and if that's something that interests you. Again, I love to share my experience, and I'm happy to share any of my story with any of you out there who are interested in hearing it. We'll give some contact information out a little bit later on in the presentation, not only for myself, but also for Dimitri, so that if you're looking at building that retirement account using real estate, you'll have all the information you need to make that connection and get started. So that having been said, Moving right along, we are going to hear from Dimitri today. He's going to be our guest presenter on today's presentation. He is our professional with the self-directed IRAs and 401Ks. He and I have worked together personally with several of our clients together to get them started. And so, Dimitri, without further ado, I'd like to hand it over to you.
Thank you so much, Christin. Can you hear me well?
Yes, I can.
Okay,
Thank
awesome.
you very much.
I'm gonna go ahead and take over. Folks, thank you for joining us. And as you can see my information on the screen, feel free to contact me. Just a quick disclaimer that Sense Financial is not a fiduciary and we do not provide legal, tax, investment, or accounting advice. My specialty is self-directed retirement accounts, and that's what I'm gonna go over today. So our mission statement is to help our clients obtain control and protect their retirement accounts. As Proverbs 21:5 says, good planning and hard work leads to prosperity. And we want to partner with you. We want to come alongside you and help you achieve that prosperity. Just before I go into the meat of the presentation, I wanted to give you just an example of one of our clients. Jason been with us for a number of years. Actually, before he reached out to Sense Financial, he had a couple of retirement accounts valued at about $135,000 and was looking at his portfolio. He was losing money in the stock market. I'm sure you can relate to that. Don't have to go back just far, just go back to the beginning of this year when the pandemic hit and many people have seen that drop, a significant drop. He was also concerned about the state of the economy and the amount of the debt that we are looking at the national debt. He was concerned that the government will come in and take private retirement accounts. So he was looking for solutions. He found us online, he contacted us, and after we established a self-directed solo 401k plan for him, here is what he did. He took his money in his retirement account. He was able to purchase the following investments with his self-directed solo 401k. He purchased a rental property. This property now is owned by his 401k. So 401k owns it, and 401k receives the rental income from this property. He also invested in his brother's private business. His brother was basically a serial entrepreneur. He's successfully started and sold several businesses. This was the next venture for him, and it was a private business, so you couldn't use a normal IRA or 401k to invest in that because it wasn't publicly traded. But because he had a self-directed retirement plan, he was able to do so. And then the rest of the money that he had left over, he invested in a real estate note. As Christin mentioned, she's done that as well. I've done it myself personally. That's how I primarily invest my retirement funds, is by being a bank and lending money to others. I love this investment class. I think it's the best for retirement accounts specifically. And so he's receiving about $1,000 a month in income. So just compare what he had before and what he has now. Not only he has a stable income, monthly income that is coming in, predictable income, but also he owns some tangible assets that they're not just gonna vanish or disappear or lose half of his portfolio overnight like it may happen with the stock market. So that's just an example. So, and the three options that I'm going to cover as far as self-directed, there are three options available. There is a self-directed custodial IRA, there is a checkbook IRA, and there is a solo 401k. So I'll spend a few minutes on each. First, let's take a quick look and compare conventional retirement account. If you have an IRA with Fidelity or Merrill Lynch or Wells Fargo, or if you have a company sponsored retirement plan like a 401K, 403B, 457. It is held by the custodian, and it only allows investments in the stock market confined options, stocks, bonds, mutual funds. You can't do anything else because custodian has the power to limit your investment choices. Here is an example of a sheet that when I was working for a company and I had a representative from the 401k will come and meet with us about once a year. He would provide us with options like this. And the options were always limited to the stock market, and they were just confined to just about a dozen options. That's it. Now, when you look at the self-directed, your investment options virtually are unlimited. What you see here on the right side of the screen is some of the most common investment options, but the list goes on and on and on. In fact, there is no list that IRS provides you as far as what's available for investments. It's pretty much unlimited. There is a list of things that you cannot do, and we'll go over that. So there's prohibited transaction rules and disqualified parties that you need to be aware of. So what is a self-directed IRA? Self-directed IRA is a tax-deferred trust account that is held by the IRS-approved custodian, just like any other IRA. But the custodian allows you to invest in non-traditional assets. So you have alternative investment opportunities there. Most of the people not aware of this existence because you're stockbroker and you're just a traditional financial institutions. They don't do that, and they're not about to tell you about those options. But they've been around since 1974, and they're designed to help people like you and I put money away for the retirement under Internal Revenue Code section 408. So how does it work? Well, step number one, you have to open an IRS approved account with the IRS approved custodian. Step number two is you perform a qualified transfer where you move assets from your existing retirement account, whether it's an IRA or employer-sponsored plan. Please note that the employer-sponsored plan needs to be with the past employer. If you have a 401k or 403b with the current employer, you're probably not going to be able to move those funds at this time until you leave that company. Now, at this point, when your funds are in the new self-directed IRA, you direct the custodian what to do and what to invest in. And but you don't have direct access to the funds. You always have to go through the custodian, which acts as a middleman. And the disadvantage of this, obviously the advantage is you have the ability to invest in pretty much anything you wish, but the disadvantage is that custodian are there to make money, and they charge you a fee for each transaction. Another disadvantage is that it takes time. Because there's a lot of bureaucracy you have to deal with. There's a red tape, and so oftentimes I get comments from my clients who desire to invest, and they want to have more control, and they just frustrated with the custodian because of the delays that it takes to make the investment. So some of those people who find it that it's not advantageous to have the custodian, they want to have more control. That's where the Checkbook IRA comes in. The Checkbook IRA, also known as IRA LLC or IRA owned LLC. So, and how it's structured is basically the central component of the structure is the special purpose single member LLC. It's created specifically to be owned by the IRA, and you, the client, is designated manager of this LLC. So as a manager, you control it. It does require IRS compliance setup and a special operating agreement reflecting IRS rules. And what it does, it allows you to bypass the custodian when making investments and making those transactions. So how does it work? Well, number one, or step number one, you open a new custodial account, just like with the previous option. And then number two, you move the funds from your existing IRA or 401k into the new custodial account. And number three, that's where, again, the central piece of this structure is the special purpose single member LLC is formed. You become the manager of this. So you control that LLC. At this point, you instruct the IRA custodian to buy LLC units or invest your IRA into this LLC. So IRA buys LLC units, custodian will issue a check payable to the LLC, mail that check to you. At that point, you will open a business checking account at the bank of your choice in the name of the LLC using LLC tax ID number, deposit that check in there. And from this point, you now buy all the investments or you make all the transactions under the LLC. So you're able to bypass the custodian. Custodian is no longer involved in the transactions. And all of the income and expenses coming from and going back into the LLC checking account, not in your IRA custodian account. So that basically allows you to do unlimited transactions without any fees. And the last structure or last option is a solo 401k, which is also known as the ultimate retirement plan. So let's spend a few minutes on discussing this option. The solo 401k is created under Internal Revenue Code section 401, and it's defined as the retirement savings trust. It's designed for those who are self-employed or small business owners. So it's not for everyone. You have to qualify for it. It's not a new type of plan, but it's basically a simplified version of the conventional 401k plan that covers only owners of the business and the spouses of the owners if they're also employed by the business. Increased interest in this types of plan was as a result of the change in the tax law in 2002 that made all the benefits of this plan possible and available for the public. So let's talk about those benefits. But before we get there, actually, let me spend the slide discussing or explaining you the eligibility. Number one, you have to have a presence of legitimate self-employment activity. It can be virtually anything. So if you're self-employed in any capacity, then you can meet this criteria. And then number two is the absence of full-time employees. You're not allowed to have any full-time employees working for you. And full-time definition by the IRS is 1,000 hours or more per year. So really the only thing that can disqualify you from participating in this type of plan is if you have a business with full-time employees. If you don't have a business, you can start one. Okay, I didn't list that as a problem. There is always a way to start a business or start some sort of self-employment activity. So how does it work? Well, number one, you have to have a plan sponsor. So that can be a sole proprietorship, a corporation, LLC, or partnership. So any business structure will work. Number two, plan sponsor adopts plan and trust is created. Okay, at that point, then solo 401k trust is used as a vehicle to hold plan assets, and you as the plan trustee control that. Similarly, as a manager of the LLC controls that LLC, but here no LLC is needed and no custodian is needed. So you gain the checkbook control without the use of a custodian and without the use of the LLC. So it's simpler comparing to the checkbook IRA, but it does give you more flexibility. And again, at the same manner, you will be able to open a business checking account at the bank of your choice for the solo 401k trust. Please note that the trust is a separate vehicle, legal entity, just like an LLC. So it will have its own unique name. It will have its own unique tax ID number issued by the IRS. And IRS will know that this is a tax exempt vehicle because when we apply for the tax ID number, we'll apply accordingly. Now at this point, again, you as the trustee decide what to invest in. So you can buy real property, you can invest in a trust deed using your solo 401k trust. And all the income and expenses is flowing from and back into the trust bank account. And as a trustee, you control that. You can even order a debit card, and you can use the debit card to pay for the investment related expenses. So as you can see, gives you a lot of flexibility. Now let's talk about the benefits of the solo 401k. First and foremost, this is it's a great tax shelter. Solo 401k plan has a very high contribution limit of $63,000. Okay, and this basically allows you to contribute. Each person can contribute up to each participant, which can be you and your spouse, can contribute up to $63,000 per year. I mean, think about the bottom line that it can do on your taxes. So if you and your spouse are in the business together, and if you're able to shelter over $100,000 from your income from taxes, that can have a significant impact on your bottom line. Number one, you're probably going to jump into a lower tax bracket, maybe even two, and then you're going to be paying taxes on significantly smaller portion in a lower tax bracket. So that is a great point there. And next is a loan feature. This plan allows you, just like a 401k that you may have at work or may had at some point, and you had the ability to take a loan from, the same features available here. You can borrow up to $50,000 or 50% from your 401k plan, whichever is less. Next is the ability to make Roth contributions. This plan has a Roth provision allowing you to make post-tax contributions up to $26,000. If you compare that with a Roth IRA, it's only $7,000, and that is dependent on your income. So if you're over certain income threshold, you're not able to contribute to Roth IRA. Well, solo 401k allows you to contribute to Roth component or Roth sub-account regardless of your income. Next is it's very cost effective, and it gives you checkbook control. It does not require a custodian. As a trustee of the trust, you control it. And also further, to provide you further savings, is that your spouse can participate if eligible, meaning if your spouse is also employed in the business, your spouse can participate in this plan. You don't need to open a separate plan for your spouse. Unlike with an IRA, each IRA is individual retirement account, so you can't have a spouse in your IRA. Your spouse will need a separate account. Here, one plan can accommodate both spouses. And then next one is it is exempt from UDFI, which stands for unrelated debt finance income. And this income is basically derived when you use leverage inside of an IRA. Then portion of that income will be subject to taxation. 401k plan is exempt from this income tax on this specific income. So just another reason to use this to invest in real estate, use leverage. There is no taxes. And it does allow you a true diversification. Ecclesiastes 11:2 says, divide your portion to 7 or even to 8, for you do not know what misfortune may occur on the earth. And that's true. I'm sure you'll agree with me. If you, like in this cartoon, Credit Goes to My Daughter, if you're like this man, have your investments in just one basket, which represents the stock market, and if the bottom falls off, well, most of the eggs will be broken. You might be able to salvage some, but most of the eggs will be broken if the bottom falls out. But if you have several baskets like that and in several different investment classes, you're not going to have bottom falling off from all of them. So diversification is a very important component when it comes to investing. And self-directed means diversification, because you have unlimited investment options. You can invest in physical real estate, single family as well as multifamily. You can do hard money loans. You can invest in private business, like example with my client Jason in the very beginning I showed you. You can even invest in precious metals like gold and silver. You can do that as well. So now let's spend a few minutes and talk about the limitations. And specifically, I would like to discuss or go over prohibited transaction rules with you under Internal Revenue Code section 4975. And the rules there says that you cannot invest your retirement account in collectibles, in the life insurance contracts, and the S corporation. Okay, so those are the only investment types that are not allowed. In addition to that, the IRS defined disqualified person, and disqualified person basically it's immediate family members, so which is yourself, your spouse, your parents, grandparents, your kids, grandkids, and their spouses. Some fiduciary to the plan and investment advisors, or if there is an entity that is owned by disqualified person, 50 or greater interest. Okay, so these persons or entities will be considered disqualified, and your IRA or 401k is prohibited from engaging in any transaction with such person. So let's talk about what those rules are. So it's number one, sell, exchange, or leasing of any property between a plan and disqualified person. So let me go over examples as we talk here. An example will be once in a while I get asked. Somebody is asking me, well, I own this investment property personally. Can I sell this to my 401k? And the answer is no, because that will be sell or this transaction between the plan and disqualified person. Cannot do that. Number two, lending of money or other extension of credit between a plan and disqualified person. So if you're buying a property in your retirement account and you're short on funds, you personally cannot give a loan to your 401k. That will violate this rule. Cannot do that. You're not allowed to provide goods or services to the plan. Another example of this will be if you are a real estate agent and you buying a property in your solo 401k, you cannot act as an agent on that transaction because you will be providing services to the plan. That's not allowed. Transfer to or use by or for the benefit of disqualified person of the income or assets of the plan. Example for this will be if you, let's say, own a vacation property on the coast of Florida. You can obviously rent that to others, but you personally cannot use that, even go in there and stay in there for a night, regardless whether you pay market rent for that property or not. You'd be benefiting from the use of this asset that your plan owns, and that is not allowed. And then next one is act by a disqualified person who is a fiduciary, where he deals with the income or assets of the plan for his own interest. So there can be a conflict of interest in this. All the transactions must benefit the retirement plan. And lastly, receiving any consideration for your own personal account by disqualified person. So all the income that you receive, that's belongs to the 401k. You can't use that personally. You can benefit from that personally in any capacity. Switching on to the buying real estate using your IRA or 401k. Please note that real estate income and gains generated inside of your IRA or 401k are sheltered from taxes. So they're tax deferred because it's a tax deferred account. So you'll be paying taxes at a future date rather than in the year that the income is generated. So you're actually able to take advantage of compounding. So your account can grow much faster. Income and gains generated inside of a Roth IRA or 401K are actually tax-free because it's a tax-free vehicle. And then as I mentioned earlier, income must go back into the account and expenses must be paid from the account. Question always comes up, can I finance real estate inside of my IRA or 401k? And you certainly can, but because of the rules that one of the rules that I mentioned just a couple of slides ago is that you cannot extend the credit or provide a personal guarantee. You cannot use conventional financing because conventional financing will always have you guarantee the loan personally. That is not allowed. So therefore, the loan must be non-recourse, which means there is no, the lender doesn't have any recourse, but the property itself. So there is no personal guarantee. Property is the only security for the loan. Typically, lenders like this will require 30 to 50% down payment. The property must have sufficient cash flow to cover all the expenses and have cash flow left over. Also, lender will require that you have reserves, typically about 10% of the purchase price of the property. If you do this inside of an IRA, meaning if you finance a property inside of an IRA, it will trigger unrelated debt finance income tax. So there is only select banks and lenders that will do that, including Marsh Reddick. Marsh Reddick specializes in non-recourse loans to retirement account, and so if you use Marsh Reddick is a great one-stop shop where you can they can help you find investment property and they can also help you get that financed. Just a quick comparison of the three options that are presented. So as you can see, you can use either vehicle to invest in alternative assets. You do need a custodian with an IRA. 401k does not need a custodian, so it simplifies the process. You can have a checkbook control with an IRA, but you do need a special purpose LLC, and solo 401k that we provide automatically comes with the checkbook control, so it's there. With the custodial IRA, there are transaction fees, and with the checkbook IRA, there's LLC fees that you need to be aware of. You can actually take a personal loan from the account only with the 401k. It's not available with an IRA. And if you use leverage, if you finance investment property in an IRA, it will result in UBIT tax, unrelated business income tax. 401k again is exempt from that. As you can see, the maximum contribution to 401k is nearly 10 times higher. So again, remember, this is a great tax shelter. If you're in business for yourself, this is a great benefit. Also, it does have a built-in Roth component. For an IRA, you need a separate account for an IRA if you have Roth funds, but with the solo 401k, you can have Roth already built in. And self-employment is required to do a solo 401k. You have to have legitimate self-employment activity or a business to be able to participate into the solo 401k and set up the plan. I know I had a limited time, so I kind of jumped through this slides quickly. And I know every situation is unique, so I do want to offer you a complimentary consultation, one-on-one with me. We can talk about your specific situation, and I can maybe help you a little bit with the strategy, develop a better strategy, or answer any specific questions that you have. You can go directly to our website. You can use this URL, or there is a link on our homepage also. and that will take you directly to my calendar, real time, and you can book a consultation and we can chat, hopefully in the next few days with you. Again, that's my contact info here. Feel free to reach out either through a consultation or just by sending me an email or giving me a call. I do look forward to speaking with you. And with that, I'm gonna pass it back on to Christin.
Thank you so much, Dimitri. And it was a pleasure, as always, presenting with you today. I always learn something. And this is such an interesting topic as well. We have so many clients who have these types of accounts set up or are eligible for them and either don't know it or just don't know what to do. So thank you so much. Some of you might be wondering, what's next? Well, let's talk about that. So as Dimitri mentioned that he would love to offer everyone on the call today a complimentary consultation, we would like to do the same. Some of you are out there maybe wondering what, type of property is best for me? What could I qualify for in terms of financing with my retirement account? And those could just be the tip of the iceberg as far as questions that you guys have. So I would love the opportunity also to have a consultation with those of you who are interested, and talk through what you're looking for in terms of an investment, what you'd like to accomplish, what your experience is, and decide what the best option is for you moving forward. So let's talk about what that consultation looks like. We will talk about your, who, what, where, when, why, and how of investing. So that's going to cover what your time frame looks like, any markets that you may have an interest in, how much you have either in your retirement account or that you'd like to purchase property with, and finally introducing you to all of those key players. As I had mentioned before, and Dimitri mentioned as well, Marshall Reddick really is a one-stop shop. So if you are looking at property and you need a loan and you need to figure out what to do with your 401k that is with a previous employer that you haven't touched in a couple of years, we can help you get in touch with all the people that are going to be important to help out and make sure that you get pointed in the right direction. So that's what our complimentary consultation looks like on the Marshall Reddick end. And then from start to finish, we will help you through the life of your investment. So not only talking about what your best next steps are, but also helping you through that transaction, helping you manage your property, etc. So for the life of your investment, we are going to be there for you. So again, why is it important that you need a plan? Because ultimately you want to be able to map out your investment strategy and you want to have something maybe that looks like this. For those of you out there who are just getting started and are looking at, someday obtaining financial freedom, one property doesn't make you a millionaire. You can't retire off of one property. You need a scalable portfolio that over time starts to replace that income, starts to give you options where you can maybe step back from your 9-to-5 job and work fewer hours, or, take more vacations, spend more time with your kids. Although those of you who may be Zooming at home right now may not want to spend more time with your kids right now, totally understandable. But anyways, we want to make sure that your portfolio is scalable so that you can work towards whatever your personal goal is. So I do want to thank everybody for coming today. And since we do have some time left, I would love to do some questions. We have quite a few questions that came in from the audience. And Dimitri, if you're okay with that, I'd like to start reading some of the questions and
Sure.
start helping everybody out.
Sure, go for it.
Perfect. So the first question is, what if I have a 401k through my federal job? Do the same rules apply?
Yeah, so if you have employer-sponsored plan with your current employer, then most likely they will not allow you to roll that account out into a self-directed IRA or 401k. Now, you can inquire with your employer about and here is the key term. It's called in-service distribution. I've seen instances when if you work for the employer for a long time and maybe a portion of your account is vested, you might be able to move portion of the account. So it's never hurt to ask, but typically if you're under retirement age and you have a 401k with the current employer, you may not be able to take money from it, or at least you might be able to take a portion, so which worth checking.
Perfect. Thank you so much. Hopefully that answered your question. And again, if you have a question, you can please type it into your question panel. We'll spend a few minutes answering all the questions that everyone has. Moving right along to the next one. Can we mix regular funds and self-directed IRA funds for real estate?
That's very good question. And under certain circumstances, it might be possible to co-invest, to invest jointly in one investment, but you can't mix. So it won't be a mix, it will be a co-investment, which is typically not recommended. But you can never mix your retirement funds with your personal funds. Again, you want to make sure that all transactions that your IRA or 401k involved is arm's length. So there is no involvement, and mixing will be involvement of the disqualified person in the transaction, which will be considered a prohibited transaction from the very beginning, or easily can lead to a prohibited transaction. So don't count on that. Count on using your retirement funds. Whatever you have, you can use leverage to buy investment property, or just look at the other investment options that are available for you based on the balance that you have available. Focus on growing your retirement funds, but don't plan on mixing.
Awesome. Thank you. I apologize for those of you out there watching. I usually can see who's asking the question and would prompt the question with that person's name so that they know to kind of perk up and pay attention. I, for some reason, can't see that information today, but we're going to keep going through. And if you do type a question in here, as I said, we've got a little bit of time and I'm going to continue to ask them until we run out of time. So bear with us. And if you have a question, we're going to try to get to all of them. Okay, moving along to the next one. What happens if there is no money left in the solo 401k account for expenses or real estate maintenance?
Well, and that's something that you need to, the question here is a question of planning. You know, you always need to have reserves. If you, let's say, if you're investing in a mortgage note, you don't really need reserves there, so you don't need to worry about that. And once you fund that note, you're going to start receiving income. But if it's, for example, rental property, you do need to keep reserves because there could be unexpected expenses. So plan accordingly. But if it happens that there is, you know, something happen and you spend all the reserves that you had, you can roll over additional retirement funds from a retirement account, another retirement account that you have, so you can move some additional funds. You can make a contribution, an IRA up to $7,000, solo 401k. You should not have a problem like this because it allows you to contribute nearly $60,000 each year. So that is a solvable problem. And last but not least, if you exhausted all the options, you can perhaps finance portion of the property. If it's not financed, you can always get a loan, or you can possibly sell portion of the investment to another investor, basically bring co-investor to solve the issue.
Awesome, thank you. And my panel has given me the asker's name. So Mansi, thank you very much for the question. Hopefully that answered it for you. And again, if you need any more information or you have any follow-ups, please don't hesitate to either type them in or you can reach out to myself or Dimitri directly. Next question, can an annuity be cashed and transferred to a self-directed IRA?
Well, an annuity in and of itself cannot be, because annuity is not a retirement account, but often what I've seen is that annuity can be held inside of an IRA. So if you have a qualified annuity, which means you own an annuity inside of an IRA or inside of another retirement account, then yes, annuity is simply an investment type. So you can't move an annuity, but you can move a qualified retirement account. So if you have an annuity, which is investment, just like you can sell stocks or mutual funds you have in your IRA, you can sell your annuity, convert that to cash, and then roll over an IRA to self-directed. Hopefully that clarifies.
Perfect, thank you. Evelyn, hopefully that answered your question. We will move along to the next one. Can we buy investment property in another country outside of the United States with a self-directed IRA? This comes from Vanessa.
Yes, you sure can. And I have clients who've done it. I have clients who purchase property in India, in South America, in Japan, Canada, Europe. So yeah, that is certainly possible. Financing is going to be a question, because all the lenders that I know, they will finance only US properties. So you probably will have to pay cash for those properties, but it's certainly possible. Yes, you can do so. That will not be possible with the custodial IRA though. Custodian will not allow you to do so, but you can do it with the Checkbook IRA and with the solo 401K.
Great, thank you. All right, I have the next couple questions come from Tyler and Courtney. First one, we have personal IRAs and Roth IRAs with Schwab. Can these funds be transferred to a checkbook IRA?
Yes, you can transfer any IRA into a checkbook. So the checkbook IRA can be set up as a traditional, or it can be set up as a Roth. Now, one thing to keep in mind is that you can't combine them into one IRA, because traditional IRA is pre-tax money and Roth IRA is post-tax money. So you can't really combine them unless you do what's called the Roth conversion. So Roth conversion is when you convert your pre-tax traditional IRA into a Roth. That will be a taxable event on the amount that you convert, and then and that's how you can combine. That's actually when the one-on-one consultation will be very handy, because I kind of deal with this kind of questions almost daily. So I would try to dig a little bit deeper with you and find out the balances that you have. So for example, if you have majority of your funds in a traditional IRA, that's probably not gonna make sense, or not gonna make a lot of sense, because it's gonna be a significant tax impact. So you probably wanna go with the traditional IRA and just leave the Roth IRA alone if it's a smaller balance. But if perhaps you have more money in a Roth IRA than traditional, then it might make sense to do that conversion if you want to grow that. But you can actually spread the conversion over the years. You can convert portion this year and then combine that with your self-directed checkbook Roth IRA, and then do more next year, and kind of watch. Conversion, doing a Roth conversion is good in a year when you have lower income. So perhaps this year might be a good year to do that, because of the pandemic, and many people had reduced income, and maybe had some other losses. So it's a good question to discuss with your CPA, but generally speaking, conversion does make sense when when you're in the lower year, so you can minimize your tax liability.
Thanks, Dimitri. A little earlier in your answer, you mentioned that was a good thing to discuss with the consultation. The follow-up question to that, and you kind of led me right into this, is what is your company's role for the client and how do you make money?
Well, our role is we basically offer two products or two services, and it's our niche is a checkbook control. We're not a custodian, so we don't do the first option that I explained. I basically explained that for your education, and it's viable option. It's for some people. So we cannot help everybody, but we help those people who want to have a checkbook control over their IRA. So we do set up checkbook IRAs. Our role is a facilitator. You're not a custodian, so we don't touch your funds. Your funds never go through us, but we creating the structure for you. It does take about 4 weeks to set up a checkbook IRA, so it's not a quick process. It takes about 4 weeks to do, and we are structuring this vehicle for you. Once we do it, then you're in the driver's seat. The second service that we provide, so we charge a fee for setup of checkbook IRA, and regardless which option you're going to choose, we'll give you a special discount by being a Marshall Reddick investor. And then the second option is a solo 401k, and the solo 401k is, as I mentioned, does not require a custodian, but you do need a document provider. So that is our role for the solo 401k. We provide you with the IRS compliant plan documents, and as a provider, it is our responsibility to keep them compliant with the IRS. So we're responsible for ongoing maintenance, IRS required plan amendments and restatements. And for the solo 401k, we do charge a fee to set up the plan, and we also, since we're maintaining it, we charging a flat fee for the support and the maintenance for the solo 401k. But again, none of these vehicles do come with the transaction fees. They're both cost effective from the maintenance standpoint, but most importantly, they give you the ability to have the checkbook control. Again, a custodial IRA might be viable for somebody who maybe has a smaller balance, or maybe just making just a kind of passive investment where they're not going to be making transactions. It still makes sense. But I'm happy to discuss the options with you, dig into your situation a little bit more, and I only want to help those people who can truly benefit, who need what we have. So if custodial IRA will be a good fit for you, I'll tell you, just as it is.
Thanks, Dimitri. I think that's really important to share with the group, is to know that we refer a lot of clients to Dimitri and his team, and they can help a lot of clients. But as he mentioned, if the services that they offer are not the best fit, then he will let you know that. So you as the client get to decide what the best way is for you to move forward and who the best team is to help you. As I mentioned, for many of our clients, working with Dimitri and his team at Sense Financial is the best fit. And of course, that's why we have him join us on these webinars to share information with you guys, make sure that you have everything you need to, make a decision on how to take those next steps. And I want to thank you guys again for joining us today. There are some questions we didn't get to. I do want to encourage you guys to set up that consultation with myself and with Dimitri. We will make sure that you have that information. You saw a slide a little bit earlier on. You're looking at my information on your screen right now. You can reach me via telephone at 949-294-8999 or via email at ctabar@marshallreddick.com. I want to thank our amazing guest speaker, Dimitri Fomachenko. As I mentioned before, always a pleasure, Dimitri. Thank you so much.
Thank you so much for having me. It's been fun presenting and especially going over those questions.
All right, thank you so much. We appreciate your time. I want to thank everyone else for joining us today, and we will see you next time. Thank you guys so much.
Thank you.